इतना सा फर्क है एक बार सोच के छोड़ देने में और लग के कर दिखाने में। मान लेने में कि जिंदगी ऐसे ही कटेगी और सुबह 4 बजे उठ के सोचने में कि अभी तो बस शुरुआत है। किसी मैगजीन को हाथ में लेने में और उसी मैगजीन के कवर पेज पे होने में इतना सा ही तो फर्क है। वीआईपी सीट में और उसकी पिछली सीट में इतना सा ही तो फर्क है। वो जिसका मैदान ही खुला आसमान है, वही कल जमीन पर तो पूछोगे तो बताएगा वो पंछी। ये एक दायरे में सिमटने में और पूरी दुनिया को दायरा बनाने में बस इतना सा फर्क है। इतना कितना है? इतना है या इतना है? जो नापेगा वो जाने कि जहां धरती और आसमान मिलते हैं, नानकुर से दूर, अगर मगर शायद से दूर, वहां भी दोनों में फर्क बस इतना सा है। धरती और 7वें आसमान में फर्क बस इतना सा। ये एक अंतर प्रेरणा है। ये हमारी, आपकी, हम सब की अंतर प्रेरणा है। एक कदम, एक छलांग, एक बाजी, एक गहरी सांस और एक ललकार खुली हवाओं में कि हाँ मैं बना हूं उन फिजाओं के लिए, कि हाँ मैं बना हूं उन ऊंचाइयों के लिए जो ऊंची तो बहुत है पर नामुमकिन भी नहीं, क्योंकि मुमकिन और नामुमकिन में बस इतना सा फर्क है। धूप छांव में फर्क बस इतना सा है। तो बस चलिए फ्रेंचाइज इंडिया के साथ ये फर्क मिटा देते हैं। फ्रेंचाइज इंडिया, 20 years of ideas.
Good afternoon, friends, and welcome to Franchise India. I am Gaurav, Marya, Chairman of Franchise India Group. Welcome to our very, very special webinar called Successpreneur. Successpreneur is a series we started to really answer a lot of questions when you are looking to start a business. You have a lot of questions in your mind, questions which can really be about the business, how to choose that business, what kind of return you can expect, and a lot of other things which comes to you because you need much more clarity when you are looking to start a business. And Franchise India has a very long journey of helping entrepreneurs or would-be entrepreneurs who wanted to start a business, in helping them to choose the right opportunity, and more importantly, help them to really understand what business is right for them and how they can reduce risk when they're buying a business. And why I chose to call it Successpreneur, because it's a combination of a successful entrepreneur. That's what the meaning is. Entrepreneur, anybody can become, anybody can start a business. To become a successful one takes a lot of effort and energy. And that's what's going to be our today's webinar. This is going to be about 45-minute webinar where we can really put that, make it very, very interactive. You can use the Q&A box. There is a Q&A box at the bottom, which you can use and ask as many questions you want to do that. And the more questions you ask, more questions about any opportunity which comes to your mind, or any particular brand you're considering, how to calculate a right ROI, and even a lot of other things, which means that if you're buying a franchise, what kind of support you can expect from a franchisor, all that you can ask in the Q&A box. And I keep taking all the questions as we go along. And it will also help others, because other people who are also joined in may be benefiting from your question. So let me start giving you a little background about Franchise India and myself. I started my career in '95 in telecom, and that was the time the telecom was just starting to happen. The GSM phones were coming out, and I started partnering with a company called SR. That's my journey really started. And in '99, I formed a company called Franchise India, which is the largest franchise solution company. Rather, we call it, we are the first platform for start your own business. So which means that anybody who wanted to start a business can come to Franchise India platforms. It can be exhibitions, our digital platforms, our magazines, our consulting team, which is spread about 94 cities in India. And you can choose what is the right opportunity for themselves. Over these years, we've been very committed to single cause, single problem solving, that we wanted to help people who wanted to start a business. They can come to us and we can help them in terms of right choices they can make, what are the industries, opportunities, brands which are available, but also facilitate the whole exercise of choosing the right business. And that's exactly what we do. We take a very big pride that nobody sells more business than Franchise India. And this claim, we don't do it only in India. This is a globally, there is no organization as Franchise India which has sold more businesses than anybody else. Even in this difficult period of COVID, we were very clear that we wanted to service our community. And 22nd of March, when the lockdown started, we started our webinars. And not even a single day has passed since then where we have not done a webinar every single day to help our entrepreneurs, people who are looking to start a business, to guide them through different opportunities, different industries, different kind of investment levels, different kind of new age businesses which are coming in, and helping them to really facilitate what business they should do. So friends, what are we going to cover today? We are going to cover, first is very important, we'll talk about the mindset. Mindset is to me the most important. Do you have the right mindset to become an entrepreneur? That's very, very important. Then we'll also say, how do you prepare yourself as an entrepreneur? That's very important, because entrepreneur is a tough journey. It's a very tough, and especially for people or friends of who are doing the first time entrepreneurship. So you should get ready for a lot of surprises, a lot of challenges. How you prepare yourself, how you train yourself to become a successful one. That's very, very important. Then we'll also understand that how to choose the right opportunity. Rather, I'll run about 10 points, how to choose the right opportunity from starting to really creating wealth, how that whole cycle would work. And then we'll also talk about how do you build value, how do you build value in your business model. And finally, I'll give you some tips on what kind of opportunities would make sense in current times and how you should make the right choices. And I'll also talk about different target groups, which is very important, because sometimes there are professionals coming to us. A lot of professionals come to us who are looking a job and starting a business. They have a very different mindset. When you are somebody who's already a business owner and wants to diversify, you have a very different mindset. If you are already accomplished and you have some extra money and you want to deploy, and you're looking for some kind of a fixed kind of a return, very different mindset. So it is a different mindset at different levels. I always call that every individual has a different risk reward cycle. At a certain level, you are a very high risk appetite. When I was in early days of my career, I had a very different risk appetite. I can risk anything because there was not much to lose. But as you grow in your cycle and you build a business and you have a lot to take care, your appetite sometimes start reducing. It's not necessarily with everybody, but in my case, it happened. I still now have become more conscious in terms of what investment decisions I want to do that versus I was 10 years back in terms of doing it. Similarly, it might be very different of risk and reward ratio for every single member. So let's start with the mindset. I should congratulate each one of you to take time out today to join. This is your first step towards your entrepreneurial journey, because you are now fixing that you want to really start something for yourself. And that's why you are attending this webinar. So it's very clearly that you are exploring a right opportunity. Exploring a right opportunity. Let's start with the first question. How many of you would like to start your business in next 60 to 90 days? Give me a firm answer, and quickly everybody should answer that. And I see a lot of people, over 75 people have joined in. So go out and answer this question. Let me see who comes in first. So mine comes first, and I always like people who come first. I always take their name because they are the one who has very clear mindset. Very clear mindset. They want to really make sure that. So Mike, you can also go out and tell what is a date you have set for yourself, and I'll come down and define date. If you've had attended my earlier webinars, you know what a date stands for. Your date towards entrepreneurship, and I'll talk about that, why it is so important. I also have a question. I'm new to business and want to start a business. So believe that brand, and if brand business doesn't do well, who's going to support? So it's a very big question. This is what I call a lot of people when they starting a business, they have a lot of confusion in mind. They need a lot of clarity because they feel that if the brand doesn't support, what would happen to my investment and so on and so forth. So which means that you're not ready, because you don't yourself are not in control. So you're dependent on outside somebody who can help you to succeed. And that's wrong. And you should not maybe make investment decision unless and until you yourself have trained yourself that you are in control of the business you want to run. So Mr. Ramu, when you are talking about and thinking about that risk is coming in because you are dependent too much on franchisor to support you, it's a wrong state of mind. It's your business. You should be in control, and you should not start something unless and until you're very sure that you can make it happen. And that's one of the mistakes a lot of people who buy a franchise do. They become overly dependent on the franchisor. They feel that just because they've taken a franchise, it would become successful. Actually, answer is no. Franchise only gives you a kickstart. It gives you a kickstart because you are going with something which has already been there. You get a know-how, you get a brand, you get systems, but it is still your startup. It would need a lot of effort and energy from you to make it happen. So hope I was able to answer your point. Never start a business with too dependability on outside. You need to be yourself in control, then only start a business. So friends, another question for all of you is that, Tim, tell me, how many of you are looking to start the business and you're a first-time business buyer? You're first-time business buyer, you've never done business. You can use the Q&A box and answer that. Let me understand how many of you have come in who have no experience in current business. So you can really write first-time business buyer or first time itself. It gives me clarity that how many of you are looking to start a business first time. Somebody says, Balveer Singh is starting in 6 months. I want to start a franchise opportunity. I'm presently working without leaving a job. I want to start and settle gradually and get going. Suggest me. Now, this is a very important aspect, and a very, very important aspect, Gautam. I go to a lot of seminars, and I ask people and say, what is your aspiration? And a lot of people tell me, I want to do something which is part-time. Anything which is part-time is part attention and part results. Or rather, part results, it doesn't happen, you don't get results. So don't just do it as a side point, because businesses are very demanding, very, very demanding. You have to understand that, and especially when a professional is starting a business, he doesn't put a lot of money. So the money really doesn't create too much of a return for you. It's your own time and involvement which creates more return. So a lot of people come to me and say, I want to start a business in 10, 15 lakh rupees, right? Say 10 lakh rupees. Now, the best ROI you can do in a 10 lakh rupee, even at a 30% return on investment, your potential to make is 3 to 4 lakh rupees, which means that you're making 30,000 rupees a month, which is a great ROI on 10 lakh rupees. But I know a lot of people would not like to do it because they can make more money in job, right? So when your aspiration is, when you put 10 lakh rupees, your aspiration is that you want to make 1.5 lakh rupees, 1 lakh rupees on the business, but it goes away from the standard ROI structure, which means it is a combination of return on investment and return on involvement. Both has to come in. Now, if you take the involvement out and say, I will not get involved myself, and I will only do the investment, then the return would be very, very low. So now, Gautam, you have to have the choice you have to make, that how do you make that choice right? If you don't want to put your time into this, then you will not get that return on your involvement component. You will only get the return on investment. And another mistake you should never do, and a lot of investors, I will alert and put this there. A lot of investors come to us who say, I want to invest, but I don't want to run and operate the business. Now, that becomes, in our terms, FOCO, franchisee owned, company operated. Now, this is not bad choice. There are a lot of large companies also doing. We're handling a company called Tata Chroma, where there is a FOCO which is going on, and many other Tata's concepts are Westside, Zodio, all are doing FOCO. But don't over expect returns from a FOCO, because now you're getting somebody to run and operate that business for you. So which means that you're not going to get the complete return. So you're sharing that return with somebody who's taking the operational responsibility and also the risk. So if somebody is going to take the risk, which means a brand owner is taking the risk, also taking the operational responsibility, not going to give you a very large return. So when you are thinking about FOCO, always think about lesser return cycles, much lesser return cycles. And this is a mistake. A lot of time in greed, both sides do mistake. Brand owners would do a mistake because they would, in this rush of scaling, commit a lot of return, which they cannot fulfill. So they create a lot of disappointment and a lot of disputes happen from brand owners. Equally from investors, they also have over expectations. Just by putting a small money, you feel that the franchisor is going to make you a lot of money. Answer is no. So be very, very conscious about any offers of FOCO. I normally would not recommend any FOCO which is not backed by a very proven system or a very large company. When you're doing with Tatas or you're doing with the groups like that, you know they are backed by a big value system. and you will be able to safeguard that. They would not promise you big return. They would give you very, very small return, but they would honor that return. But sometimes these smaller brands are very dangerous and because they are not ready to support that kind of expansion. So very clearly be right on that. So I have a lot of other questions also. Let me take Imtiaz the first time. Somebody wants to start in 2 months. I have an interior business from 2018, Imran says, and how do COVID is not doing well? I want to take new ideas. Absolutely. You should really look at new ideas. While I think interior design still, interior business still holds good because that industry has not slowed down. That industry is still very, very strong, but you can partner with some established brand. You can get into a lot of other franchise opportunities, like say a modular kitchen. It's a fantastic franchise opportunity, a great high ticket, a lot of demand, a lot of new construction happening in India. Say you do a modular kitchen, it can give you good margins. Even if you sell 3 to 4 kitchens in a month with the direct sales team, which you are able to pull that, you make a lot of good money. Gautam says time involvement and management are key things. Absolutely, it's a very, very important part for your success. It is it's a combination of what I call great idea. It is a combination of what I call the right timing. Timing is also very important. Adequate capitalization is also very important. You need to be adequately capitalized. 70% of businesses fail because they are not rightly capitalized. 70%. It's a big shocking number, but businesses don't fail because entrepreneurs don't want to work hard, or they didn't have idea, or they were not on right timing. They fail because they were undercapitalized. So that's very important. You need to train yourself as a good entrepreneur and understand the subject which you need to do that, and follow the entire business cycle, which I will explain that. So let's start with a mindset. Mindset is very important to me, and mindset is setting up a date of your entrepreneurial journey. That's to me the most important aspect. I know a lot of people who explore for starting the entrepreneur journey for years and years, but not able to do that. Why they are not able to do that? Because one, it is not very certain to them. What they want from that business is also not very certain to them. So if you don't have a larger objective very clear, it's just aspirational. Just because you are tired of doing your job or you are not enjoying it anymore, you want to explore being an entrepreneur, but you're not preparing yourself to be a good entrepreneur. And this is one of the mistakes people do. And then they get up into sometimes becoming an impulsive entrepreneur. They're not very designed entrepreneurs. They're not going out and saying that, look, I'm starting my journey as an entrepreneur, and I would like to give myself 3 months, 6 months to prepare myself, train myself, and then go out in the market. So one of the messages, if I can give it all of you, is that first fix that date. What is your date and commitment towards your entrepreneurial journey? And let me explain the date itself. I have defined date into these 4 different things. D stands for discipline. Unless and until you bring in extreme discipline towards your entrepreneurial journey, and even if you become an entrepreneur, it needs the most discipline from you, because everybody else is going to follow you. Your team is going to follow you. Your suppliers are going to follow you. Your clients are going to follow you. You need to be somebody who's in extreme discipline. That's very, very important. A stands for accountable. You need to set everything accountable around you. Very, very importantly, not only from your time management, but anything else needs to set that accountability. Performance itself, sometimes you need to set that accountability because you're running the ship. You need to set everybody accountable around it. T stands for training yourself as an entrepreneur. To me, whenever you're buying even a franchise, you need to go out and really tell your franchisor and say, I need to be trained. I need to be given 7 to 10 days of extensive training, how to run and operate that business. And that confidence until comes inside you that you can do it. This you can handle. You'll always be insecure. And I see a lot of entrepreneurs out there who start the business or looking to start the business, but they have a very big insecurity from the day one running. Would it be successful, not successful? Because they are not trained themselves. They've not trained themselves that they can handle that business. They're always dependent on somebody else. First, they would be dependent on the brand owner. Then they would be dependent on their employees. So all the time, they are very insecure about their business because they have not trained themselves on that. And that's something which I feel is very important. Any business you start, you need to train yourself deep into that business. Yesterday, I was with a very successful entrepreneur, and he started direct-to-home healthcare business. A big IT professional. He actually went to do a diploma in home healthcare, which is actually a nurse diploma for 6 months. Somebody who run a big IT company to actually do a diploma, because you're now going to manage a large talent. And if you don't understand the pain points, understand the problems of a nurse, understand the entirety, you will never be able to do that. While he did extensive training of running a company before he do a full 6 months of understanding. But this is a good habit. I know good entrepreneurs would spend a lot of time before they jump into the business. They would train themselves. They would train themselves to understand the industry, understand the methodology, and then jump into and take the responsibility of running a business. Another thing, which is the E last, which is encouragement. You need to encourage yourself every day that this is your business and you're going to make it happen. So if you are starting your journey as an entrepreneur, always remember DATE, D-A-T-E. Make yourself disciplined, make yourself accountable, train yourself as an entrepreneur, and encourage every day, because nobody else is going to encourage you. So that's very, very important. Once you have done that, then understand and answer the fundamental questions. What are you bringing in as your resources to the business, right? The first is capital. Where is the capital coming from? How much capital you are committing yourself? And are you taking your own capital or you're taking a debt? And if you're taking a debt, what is the cost of capital you're committing? That's also very important. Like yesterday, again, I had a meeting with somebody and I looked at his business. Good business, very, very good business, but a lot of debt. And I felt that financially, he was just working hard to service that debt, because his equity debt ratio didn't make any sense. Didn't make any sense because he had more debt than his own equity in the business. So even if business is doing relatively okay, he will be only able to service the debt. He will never be able to bring in anything out. Which means that if you have bad months, say you had COVID and your business stopped and everything else, you will mount up even more. And that's the problem which business owners do, because they start with a lot of debt component in the business and they have not so even business cycles. And when they have good times, they actually take money out and they spend on their own thing. They never reduce the debt. And as the business is not done, they actually over leverage and they get into a wrong cycle. Their debt equity ratio actually goes out of their control. And we have seen large companies have collapsed. Large companies. Not that they were bad businesses or they were not profitable at one point in time, but their cost of capital was so high and kept mounting, and you will become at one point in time non-sustainable. It was not that Jet Airways was not a bad airline. It was a bad airline. It was a fantastic airline, top class service all through when they were in. It was a number one preference by anybody who felt that a good airline should be. Jet Airways was absolutely a delight as an organization. But the whole component was because in the last 20, 30 years of their existence, there were so many different cycles happened where sometimes fuel cost went up, something else happened, some business dropped. And every time any adversity happened, they mounted more debt. And it came down to a level where it was non-sustainable for the business and the business collapsed. So friends, one of the areas which I would see when you're calculating your resources, when you're planning your resources, and when you're doing that, defining what capital you want to deploy, be very conservative. Don't take any kind of a debt component in that. Okay. So, and Mayank is asking, what average ROI in an investment of 70 to 80 lakh? Very good question, Mayank. Why I'm taking your question? Because ROI is a myth, and it is a myth because it depends on the opportunity and the life of the opportunity. For example, if you are investing into a school, right? Now, school is going to be running maybe for next 50 years, maybe for 100 years. Your grandfather's school still exists, right? So the life of opportunity is very high. So you can settle with much lower ROI cycle because the life is very high. But if you are investing into something which you feel is more relevant for the next 3 to 5 years, then you need much better and faster ROI so that you want to cover your investment which you've done and you also make money on that. But in franchising, a good ROI would be anything from a 25 to 35%. Don't over expect ROIs beyond that. That's also a very, very good ROI. But again, you have to really see how do you bring these 70 to 80 lakh rupees. Are you bringing all your own capital? Then this is a great ROI. But if you are saying doing some borrowing and there is a cost of capital of 10, 12% on that, then how do you really balance yourself? And what are the events which are going to happen? At what stage you want to maybe withdraw from the business? Is it going to give you easy exit, or it will be very difficult to get an exit? All these components have to be calculated before we really finalize what should be an ROI for you. Because it might be a situation that 4 years from now, you need this money and you need to get that exit. Then maybe the business model would be very differently suggested to you. But if you feel that I want to be in long term in that, then I think I can start with a lower ROI, but it continue to improve, and there is a much longer period. Then maybe healthcare, education, things of that nature, which can do 2-decade cycle or 3-decade cycle, and something futuristic, which is going to be built over the time, something more stable. Once it's established, it needs to be done. But maybe if you want to get into a restaurant business, you need reinvestment after 3-4 years, 5 years, because it will get fatigued. So you need to really, Mayank, understand, and that's where Franchise India and our consultants really help you to make that decision right, because that's a very important decision when you're doing it. So when you're discussing on your resources, first you need to understand the capital part. Be very honest about it. If you have 100 rupees to invest only 70, keep 30 for your gestation cycle. That's very, very important. This is a mistake everybody does, that they overestimate their strength to turn around that business and never calculate gestation in the right sense. Gestation is not only the business, but everything you bring with that. Even your team you hire. Early days, you will have a lot of issues. You hire a team, they leave you, you need to bring back new team, train them again, and so on and so forth. So all these can delay your performance. It can delay your performance from 3 to 6 months, sometimes 1 year, by the time you are stable. So if you don't have enough working capital, it can put you in a problem. So very importantly, understand your commitment of capital, what you want to do that, and what the kind of a return you expect from the capital to service your requirements, which you have, your financial goals, which is very important, because your life goals and financial goals are very important. Life goals are which set what you want in life, and financial goals are which are your immediate financial goals, because you have some financial goals which needs to be done. Is the capital deployment is servicing these two things very importantly? That's very, very important. The second is your time. What time and resources you're bringing to your business. And sometimes it's not only your time, but maybe you're bringing your family members also along. What is the commitment you are giving to this business? And Indians are very hardworking, right? So Indians are very, very hardworking. So they don't mind doing it, but define that. And define also, if you would have put that same time in something else, what would be cost of time for you? As this is I give to every professional. And say, when you put in capital, see what capital can give return to you. When you put in your time, ask yourself, if you put on the same time into something else, what return you will get. For example, I got a person who came to meet me in Chandigarh, and he runs a nice cafe. And I asked him, what do you do? What is your background? And he told me that I was a CFO for a company, and I was tired, and I started this cafe. And I quickly understood that what he's done would never make sense for him. He's invested his 30-40 lakh rupees to start this cafe. And this 30-40 lakh rupees, even if it does well, can maximum give him a lakh of rupee or a lakh and 25 as a return. And now, because he's put this money, all the time he's putting into this business. Now look at it. This is a risk capital. He's struggling hard to make it happen. And it is the first cafe is done. So it's not even breaking even at this stage. And every day he will go to work and say, if I would have not done this mistake of putting this cafe, I would still be in job and making a 2 lakh, 3 lakh rupees a month, right? Even a mid-segment CFO would make that kind of money. So as an equation, it would never make sense for return of time for him. Now he has to understand that if he wants to do a justification of the same investment he would have done, he would have asked himself that this 40 lakh rupees should give me at least 4 lakh rupees return on capital, which is another 2 lakh rupees, and return on my time, which is 2 lakh rupees. Can this cafe give me 4 lakh rupees? And if answer was no, this was a bad investment. This was a bad investment because he did it because he always liked food and he felt that this can be done. And I know people like them, even if the business starts sustaining, they go back to job. and they would put somebody in their family to just overlook that business. And eventually, sooner or later, even if they do it, the business would die. So these are very important calls when you do, so you have to really see what is your time worth, what is your time worth, and what is the capital return you want. I think if the combination of that is not making sense, it would not do that. Third is your experience. You also bring in your experience, which you can bring value addition in that business. Are you choosing a business which you can value add? Are you able to take that step forward in that business because you have some extra experience? And also along with that, what is the strategic input you can bring in? Sometimes you have some database, or you have a location, or you have a go-to-market strategy, or you have something else which is a very big strategic value to the business. So unless and until you really map your resources right and you define your resources right, you should never take a decision to start a business. Few more questions I will take. Somebody says, already in telecom business service in UAE and want to start here in India. Okay, you can start Balbir. Many businesses are there. Whether an HR franchise opportunity is good enough to make a decent ROI within 3 months minimum, because I see a lot of such opportunities in websites. HR franchise, we have many franchise, is a low cost opportunity unless and until you create a big firm. It's a low cost opportunity, and HR also is to be defined. If you're in a senior executive search, that's a good return on investment, but it takes a lot of effort, time, and sometimes high gestation, because to crack new accounts becomes very difficult. So whenever you're taking a franchise from a company on HR front, you have to ask what they are bringing in on table with you. Are they bringing in some disruptive technology, or are they bringing in some corporate relationships which you already have, which means that I am already servicing 20 large corporates and I've already created a demand and I need a franchisee to service that demand. And what kind of a realistic recruitment cycles you can do. So it's very, and if you do a low set level of recruitment, it's very commoditized, extremely commoditized, and very difficult to make money. So friends, go out and keep asking questions, and we get on to the next cycle of that, how to choose the right business opportunity. And we will talk about that and use this Q&A box. A lot of people are asking questions. Another question has come from Gautam. Being a first generation entrepreneur, how to choose a franchise opportunity depending on certain key points in your experience. Okay, so that's what my next cycle is. How do you choose a right opportunity? That's a big question. There's a big question. Almost everything looks attractive from outside, but when you go deep into that, then you find that this might not be the right opportunity for you. Another thing I will tell you, over my experience of selling so many franchisees and businesses over the time, I have realized not every opportunity fits every individual. That's why we're all unique. We have unique markets we operate in. We have unique capabilities we operate in. We have unique appetite of risk we operate in. A lot of these are big variants. And how do you really answer that? What is that one business which fits me and I can make a meaningful level of growth in that? So I have over the time realized that if I work with any entrepreneur, say I work with Gautam and say, Gautam, let's put 3 months, and from today to next, say April 1st is your date to start your entrepreneur journey. And if you want to really do that, let's put some kind of a methodical approach so that we are able to narrow down the right opportunity. Over the years, I have mastered a very simple principle. I divide this into 3 cycles. One is what I call information cycle, where you need to seek a lot of information on opportunities, business available in the market. That's the first cycle. And that cycle should be maybe 20 to 30 day cycle. And you need to carve out maybe every day 1 hour towards that and really put focus and say, how do I really work on every single day 1 hour on my research and understanding information. And Franchise India today has a biggest library of opportunities, biggest library. We can give you over 10,000 different opportunities. And by the time you reach to 10,000, we will have another 5,000 ready. So much opportunities keep coming into Franchise India. It can be distribution, retail, different franchise opportunities, area franchise opportunities, master franchise opportunities, multiple different opportunities, even resale opportunities, which means running businesses which are available for you. So there are so many choices. So first stage is information. How do you really get more and more information? Then second stage is evaluation. How do you evaluate the right opportunity? And third is even more critical is negotiation. How do you negotiate the right business opportunity? That's also very, very important. So to do this, we divide and connect 4 dots. The first dot is selection of the industry. Why are we choosing this industry over other industries available in the market? And this is based on your own strength areas and your weaknesses. Both are very important to understand. What you would not be able to do is more important to me. What you're able to do, that's fine. But would you not be able to do that? Like, for example, I have every single person I put into 4 fits. 4 fits, and you can all make notes on that. One is strategic fit. What is your strategic advantage as an individual? Second is your marketing fit. Are you a marketer who can take things to the market, or you are not somebody like that? You are more somebody who can invest and would not have the capability of go to market or push the product. Sometimes the concept based businesses need a great marketer, somebody who has a great go to market capabilities. But somebody who has not done that maybe is not fit for it. Third is financial fit. What is your financial appetite? And find is operational fit. Operational fit means that how operationally you're involved. Say, for example, if you come to me and say, I want to start an F&B, all 4 fits are important, but operational is the most critical one. But if you come to me and say, I want to start a hospital, all 4 are important, but I will put financial fit most important because they have a very high gestation cycle, very, very high gestation cycle. But if you are, say, a new concept, which you want to do, say a new e-vehicle brand which has been launched, but brand is not very popular, new business which is coming in the market, you need to be a great marketer. But if you are somebody who is buying a fashion franchise, then I would take a strategic site because the location to me is very important. So really speaking, first understand yourself, understand where you're coming from, what are your strength area, what are your weaknesses. And on that, we start mapping the industry. That's one cycle. First is your fitment to that industry. That's very important. But equally important is that what is this industry telling you over the next 3 to 5 years? How is the world trends telling you what is going to happen in this? Is there a big disruption already started or can happen? And are you prepared to handle that disruption? Would you have that capabilities to handle the disruption? Because almost every industry is going through some form of disruption. So industry selection is extremely important. And sometimes we don't select one industry. We go out and pick up 3 or 4 industries. That's very, very important. And once we have selected, say, 4 industries, and we have done your fitment to that industry, and also we've seen that industry over the horizon of next 3 to 5 years, and then we move to the next part is actually selecting the brand. In each industry, say I've got 4 industries, then I will go out and shortlist maybe 10 different brands in these industries. And why I'm choosing these brands over their competition. So I will write one industry, say I've selected healthcare. I will write down maybe 4 brands, but I will write competing brands on all the 4 things. So I chosen, I can do a polyclinic, I can do a pharmacy, I can do direct to home healthcare, I can do maybe a specialty clinic or a dialysis center or something like that. Then I need to know which are the companies that are doing dialysis in the country and why I'm choosing this brand. Who's is very, very important. So unless and until we understand a very detailed competition mapping of these businesses, you'll never be able to really shortlist the right brands. So 4 industries, 10 brands now is done. So we have 10 brands. Now we get down to the more important part. And this is where you need to be extremely honest to yourself. What is your financial goals? If your financial goal says that in the next 3 months, you at least need 2 lakh rupees to pay your EMIs and so on, is this brand going to fulfill that? Are you able to really get on to that level in 3 months? Or it'll take 6 months? Where is the additional capital or working capital you want to bring in? Are you adequately certain that this would happen, these milestones? Why you are certain? Because once you draw your thing, it means that you have these kind of financial goals, and then understand what company is offering as a franchise company, and then do a comparative with their existing franchisees. Whatever is being claimed by this franchisor has happened in past, any historical data which tells you that that exactly happened. And out of the 10, even if 5 had got it, then you have a chance that you will also get it. But out of the 10, if only 2 have got it or 1 has got it, then you're very unlikely that you will get it. So what is the plan B for you? Change the brand or be ready for longer gestation cycles. So you need to really set your financial goal. And this is very important for you to really set that financial goal and also define what are the critical events which are going to happen in the journey of your entrepreneurial journey. In next 5 years, what is the 3 or 4 big events which you think would happen? You want to buy a house, you want to have children's education, big education coming in, you have some marriage coming in your home, something which has happened. So is this business going to fulfill that life goals for you? And what are these life goals for you and when are they going to happen? That's very important. And finally, we come down to your micro market. What is this micro market which you're starting a business, and what is your micro competition? So unless and until over 2 to 3 months, you've done these 4 dots in a very, very structured way, you are not ready to pinpoint and say, this business makes sense for the thing. And then we start training ourselves on that business, getting the right contract, signing the business, and getting started with that business. So that's a very, very important journey. Absolutely, Mayank, we can do that. We can set a time where we can do one-on-one meeting. I set these 20-minute discussions with investors. I did it on 26th of January, 40 investors in the day. I started 9 o'clock until 7 o'clock in the evening, back-to-back 20-minute discussions. I'm able to give you insight on what business needs to be done. We can set up. I spend a lot of my weekends on helping entrepreneurs who are looking to start a business. So somebody says, Aji says, can you help me choosing the franchisee which has low investment and good returns? And startup would be able to make investment, lakhs of money. Okay. So this is a question I get a lot of time. A lot of time people say, I want to invest small, but I have a high expectation of business. So understand there are 2 types of businesses very clearly. One is return on investment business, where you put capital and capital works for you, which is classical distribution kind of businesses. Say I put a distribution for an X company. I take a distribution for Nestle and I put stock worth 1 crore and I sweat out that stock, and my potential to make money on that would be, I can make 18, 19, 20% return on that capital, which means that if I put 1 crore, I will make 17, 18, 19 lakh rupees a year, which is a very good number. But only capital is working for me. I'm neither generating demand, neither I am building a brand. I'm doing nothing. I'm just sweating out my capital. I put 1 crore, I'm sweating out capital. Large part of people who have money would seek these kind of businesses because they feel that if they're able to get 19% of return on their capital, they're very, very happy. And sometimes there are players who come to us, which are large investors. They are very happy even in 14, 15% of return. By the time it has a lesser risk, which means that if you are a distributor for ITC, you're doing a 50, 100 crore kind of turnover. You are working at a 12, 14, 13, 15% of return on capital. That's also good structure to do that. You don't create any demand. You just bring in infrastructure and capital. This is purely return on investment businesses. But I know a lot of my professional friends who serviced in the company for 20 years, 25 years, and now want to start a business. They don't have this kind of capital. While they have their saving, they have their assets, but they don't want to dilute, sell their houses or entire savings and put into business. They want to bring a lot of their own capability inside the business. But expectation is much higher than even investment. I know a lot of them come to us and they want to make maybe 5 lakh rupees a month, 7 lakh rupees a month, or 10 lakh rupees a month, but they don't want to invest more than 20 lakh rupees. Now this breaks the whole structure. How can you put 20, 25 lakh, 30 lakh rupees and still make 5 lakh rupees? It's impossible. It means that you will get your return in 5 months. Now, these businesses, if they really are serious businesses available, everybody would put money behind that, right? The truth is, there are businesses like that available, but these are what I call return on involvement and return on intelligence businesses, where you bring in your professional experience into that, something which you are bringing more than the capital. So you have to be very clear. If somebody comes and say, I want to invest small money and I want a higher return, this equation is wrong. Unless and until you tell me with money, what else you're bringing in, which can give you higher return. So hope I am, Raji, able to give you that answer right. Don't get into this situation. There is no business where you invest very low cost and you get a very high return. There is nothing like that available. Unless and until you define that outside capital, you will bring in something also very, very critical, which can give you that kind of return. That's a very, very important part. Hope I answered you. I want to start a dairy business. Please guide me. Dairy business, many from Amul to Mother Dairy, they all franchise. Very tough business. Very, very tough business. Starts very early in the morning. We did Mother Dairy franchise. The franchisee had to open up at about 5 o'clock in the morning to receive goods. And then by 10 o'clock, it goes out. And then you have evening also to do that. It's a tough business. And people who don't have that kind of operational capability do it, never make money, because it's a very commoditized business, very low margin. It sells very fast, but a very, very low margin business. Only people who are successful in this are great operators who are operating the entire piece. So you need to be, sometimes we think that ease of business, I don't have to make an effort. I want to get into FMCG, dairy, pharma, because anyway, demand would be there. But truth is, they're very, very small margin businesses. And if you don't operate and you just delegate, nothing comes to you. So it's very, very important that you understand that part. Few more questions. Cargo and courier. Yeah, cargo and courier, a big franchise going on. Last mile logistics is going on. What is the chance of taking a franchise in auto e-space? A lot of charging station. I'm launching one big company in e-charging infra space. So that's also a big time coming on there. So let's start quickly, because I've already done 46 minutes and I have another 10 minutes, maybe I can stretch. So if you are starting a business, couple of things very important. When you start the business, put the business cycle. A business cycle is into 4 parts. First is incubation of your business. First 3 months, you don't know anything about the business. You might have learned, you might have trained yourself a little bit, but you still have not operated that business. First 3 months is full of surprises. So don't indulge too much. Don't do too much of marketing. Don't do grand launches. Don't do anything else. Be very conservative. Learn every small aspect of that business. Do everything which is to be done in that business, so that at least you can tell yourself that I know everything about my business now. That's your incubation stage. Once you've done the incubation, you go to stage 2, where you get stabilize your business, which means that no more surprises are happening. Business is looking like coming in control. Your team is stable. You have the same consistent customer flow, and customer is giving good feedback, and all that is now very, very stable. Then you get into third cycle, which is really the growth. And this is where the entrepreneurs enjoy, because everybody likes growing their business. And that's where you start growing, not the first 2 stages. First 2 stages, you're not ready for the handling that growth. Third stage is when you start growing. And the fourth stage is really where you put the business into sustenance, which means that now the business would get on to what kind of a proportionate growth cycles. The business would grow month on month, or a quarter to quarter, or a year to year. So growth cycles would start. Now it's sustaining. It's sustaining as a business model, while innovation would always be required. I feel that the cycle of innovation has changed. Earlier, 20 years, it used to be cycle of innovation. Then it reduced to 10 years, then it reduced to 5 years. Now it has come down to analyze innovation. And I think that the journey we are going ahead, it can become even more shorter, which means that companies would have to innovate even faster, even more fast than what they have been doing. If you see the classical auto example, the models in 80s used to change once in 10 years. If you have one car been coming in 70s, you were even poor. You had the same Chetak design, a marginal change in that over the next 15 years and so on. So then it started moving much faster changes when the times of, say, in two-wheeler, Hero, Honda came and things like that. Now it has come down to a point where it is hyper innovation. It's just happening very, very fast, because consumer is extremely restless and doing that. So you need to really build a business which can accommodate that training cycle. So these 4 cycles are very important. You need to really understand these 4 cycles, and then you also have to really get on to when you have reached sustenance of your business model. Then it's the way you need to decide the next course. Some entrepreneurs, when they have built something successful, become more experiment and they start going into some other businesses. I am a big believer that if you have something successful, try duplicating that. start duplicating. And rather, I've written a book called Reproducing Success. If you have something successful, the best thing is to reproduce, multiply that, and that would create value for you, a big value which you eventually can find an exit, and a good profitable exit can give you the wealth creation. So friends, if you are starting a journey, first remember the mindset has to be there. Set your date which you want to do that. Get into a very firm selection cycle. What selection cycle you're running? Build your business brick by brick, and do the 4 cycles of your business. Get onto a stage where your business is sustainable. Try to reproduce that success and make it a meaningful size of business. And at that stage, you can look at an exit of your business, because now you have done this journey, and now anybody can benefit of that journey which you have done. And then you can transfer that business, and it can create wealth for you. That's the cycle I'm now educating every single entrepreneur to really work on. At Franchise India, we help you a lot in terms of making the right selection of business, what business you should choose. We have a program called Advantage, where we help you to go through this whole journey of a selection of the right business model. And once you are sure that this is a business which is right for you, and you have consulted your family, your chart accountant, your lawyers, then make a decision to invest in the business model. Now, how to select what format you want to get into that? So multiple formats are available. You can do a franchise owned, franchise operated, which means that you operate a unit. You can also do a franchise owned, company operated, which is very rare. Remember my thing, unless and until there is a very strong committed franchisor, don't invest into that opportunities. You can also take an area franchise, or a cluster franchise, or a city franchise, which means that you take a much bigger territory and develop that territory. You can also take a master franchise for a larger region, or larger region as India. And if you are interested in taking an area or a master franchise, I'll be more than happy to consult with you and help you taking that opportunities. So Franchise India has the biggest basket probably in the world for opportunities, and our consultants are available in 94 cities. So we are setting up appointments for people to really set free, no obligation, a call with our consultants to understand what opportunities are available, how we can help you in taking those opportunities, a little bit of information, a lot of reading decks. If you say, I give me 10 or 15 opportunities, presentations to read through, all that is available. Don't rush into taking a decision to buy a business. Take a very methodical approach of buying a business, and then only take a decision. So friends, I'm putting my direct number on this chat box. Send me a little details about your profile. It's very important for me to answer you, because a lot of time people write to me. I get hundreds of WhatsApps and emails and LinkedIn things. I reply very few. Only one I reply. It's not about what investment you have. You might have 5 lakh rupees investment, but if you explain me a little more about yourself, give me a little background about where you're coming from, then it makes sense for me to put the time and effort to do that. Sometimes I get messages like, hi, hello, good attending your webinar. I appreciate that you've sent me message, but because I don't know what you have expectation from us as a company, I'm not able to guide you to the right people. So please take maybe a 1 to 3 minutes to define what you do, why you were here, what is your aspiration, what is your timeline, and what kind of businesses interest you. Have you explored any opportunity which you want us to help you to evaluate what is right or wrong, and give you some kind of a data. We have a lot of data on what has been the success stories, what have been failures, how to really reduce your risk. All that we have, and a lot of data to read we have, which can help you to understand businesses better. So thank you very much for your time today. I hope I was able to give you some insights on choosing the right business. While it is difficult to do in 1 hour, it needs a much more deeper discussion, which is 101, because every person is unique, every market is unique, every business which you choose is unique. So unless and until we have a deeper insight on that, it would never work. But this is a beginning of your entrepreneurial thinking, of thinking about how you can start your business. So thank you once again for joining this webinar, and appreciate you taking time out and coming for and spending 55 minutes with me. I do this every Saturday, and every day we have a 12 o'clock webinar, which happens on different business opportunities. Tomorrow, if you have not registered, please register. There is a Bharat franchise show coming at 12 o'clock tomorrow. It has multiple opportunities which are coming in. Register yourself today itself, so you will be able to get a link and you can join 12 o'clock tomorrow. And if you have family members who should be part of that webinar with you to really see that they are having the similar interest as you have, it is good. Especially if you are young, you might bring in your father or somebody who has the wisdom to help you to make that decision to choose the right business. And if you're not fixed your appointment, please fix your appointment with our team members for one-on-one discussion and advisory session. Thank you very much. Thanks for your time today. Please do take care of yourself.